1% of term pays out. You either outlive it or you get priced out of it. Whole life lasts your whole life, right? If term is issued, there is a 99% chance that is not paying out. Every single person out there has a different situation, whether it is young, old, healthy, unhealthy, male, female, smoker, non-smoker, house, no house. You can't just get generic with insurance. You can go 10, 20, 30, 40 years in a term policy, paying X amount of dollars a month, no cash value. You outlive it, poof, nothing back. Whether it's term, whole, universal, doesn't really matter. It's what works best for you. It's where your health takes us. It's where your budget takes us. You guys bust your rear ends 40, 50, 60 hours a week to protect your family. You don't want to take 5 to 10 minutes to sit with a professional to protect your family after you die. If I asked you, do you want to shop for life insurance? No one is going to say yes. If I ask you, do you want to protect your family after you die financially? Everyone is going to say absolutely, right? We get calls all the time from 75, 80-year-old people. We know what is going to go on that phone call. Mike, I have a policy and the premium just quadrupled. The statement, you get what you pay for, has never been more cliche and true in the world of life insurance. My grandfather always used to tell me, work with the client, not the bank account. Peace of mind is priceless. You cannot put a price on it. What's up, guys? Mike DeSecco back for another Timeless Talk. Happy New Year. It's 2025 when this airs. I hope you guys are all having a blessed day, weekend, night, whoever you're with, wherever you are at. I hope you are in good spirits. It's a new year. We all have our resolutions. We have goals in mind. I hope you guys are thinking about crushing 2025. I know my team and I are. So I own a company named Timeless Protection, and we protect vets. What we do is we jump in to the trenches, you would say, for insurance products. Most people do not like to shop for insurance. They actually hate it. But at the end of the day, we need it. So we do the dirty work. We know the fine print. And we are very, very transparent in our process. We have a sales tactic here. It's called transparency. Hard to come by nowadays. But if you have not yet, give me a like, give me a follow, hit the subscribe button, and hit the little bell for the notifications. And Aaron, start this out with a get to the chopper from the movie Predator, Arnold Schwarzenegger.
Get to the chopper! Get to the chopper!
Again, Mike DeSecco, owner of Timeless Protection, and we protect vets. I want to get into something very basic today. What it is, at the end of the day, whole life versus term life. Who, what, where, when, and why. I've had a lot of calls as of late with just a bunch of myths. People hear certain things from one person. It's like your uncle tells you that whole life is just a joke and a scam and blah, blah, blah. Term life, you should never do that. Everybody's situation is different. Every single person out there has a different situation, whether it is young, old, healthy, unhealthy, male, female, smoker, non-smoker, house, no house. You can't just get generic with insurance. You have to tailor policies to people's situations. This is where people go wrong because they don't want to take the time to actually do that. You guys bust your rear ends 40, 50, 60 hours a week to protect your family. You don't want to take 5 to 10 minutes to sit with a professional to protect your family after you die. That seems kind of silly to me. Now, I understand that the process and shopping for insurance and all that is awful. Now, if I asked you, do you want to shop for life insurance? No one is going to say yes. If I ask you, do you want to protect your family after you die financially? Everyone is going to say absolutely, right? So we have to basically, at some point, put up or shut up and deal with this. Now, there are people that we speak to daily that really believe in life insurance. There are people that we speak to that are just sick and tired of it, and they kicked the can down the road, and now they're older, and now they're really mad at the pricing. It's just like a never-ending circle of upset people. But when you find that veteran, or when you find that person who has had bad guidance or purchased their own policy, and you can save them a large chunk of money and put them in the right spot, by educating them, advocating for them, and actually showing them why we're looking at what we're looking at, their eyes are open and they're very appreciative of it. Now, we have talked to thousands and thousands of veterans. We have reviews from people who haven't really purchased or haven't ever purchased coverage from us. But because we actually took the time to discuss things, to explain things, to educate, to advocate, they're thankful. Generally we teach more people in the first 3 minutes or 4 minutes of a call than they've ever learned about life insurance. Unfortunately, I'll just say it, and if you're one of these consumers, I apologize, but you need to hear the truth. A lot of consumers are gullible. A lot of you guys fall for the $9.95s because you don't want to speak to a salesperson, because you had some scumbag come sell you crappy windows, or he sold you or she sold you a crappy car. Not all agents or reps are bad people. I totally understand somebody's hesitance. I think you should be hesitant. I think you should really want to know who you're working with. Now, I took a phone call today. A woman who watched one of our videos. Her husband is a vet. He's got some certain health issues. She wasn't even really sure we could help, but she just needed guidance. Well, come to find out, we're going to probably be able to help this situation and this woman. And now she's got a little bit better, or if we're able to do this, she will have a better feeling inside, knowing that there is a buffer and some financial security there. And peace of mind is priceless. You cannot put a price on it. When we work with a ton of vets and you've got a bunch of guys at 100% disability, most of them are shouldering the bills. Because of that, if they were to pass away, now their wives are going to miss out on a bunch of income. Now they're responsible for all of these bills. If there's a $2,200 a month mortgage payment and then the car payments, that is a lot to put on someone. There are certain scenarios where we're just buying the spouse time with policies to sell the house because the equity is the biggest chunk of money that we can achieve. We can't get it through life insurance, whether it's health, age, budget, whatever the case may be. So we protect the equity in the home. You don't even have to work with the smartest person, but the person that has gone through and been in thousands of calls in every situation and understands life insurance is going to be able to help you. I don't care what anybody says. They're going to fill you in on some stuff. But you have to also look at the other things. Is the carrier that they're bringing to us A-rated? Is the cost the lowest? What does this policy do? What does that policy do? And that's what this video is about. In any scenario of needing life insurance, you've just got to break down the variables. How old are we, right? If you're in your 20s to 30s, one, you should be looking at indexed universal life, and you should be flooding that thing with any type of funds that you can overfund it with, aside from the premium. But term is probably the choice you would want when you're very young, term or universal, because you can get so much coverage for such a little cost. But this is what people don't understand. Just because you have a $500,000 life insurance policy doesn't mean your spouse is getting a $500,000. Why do I say that? Term expires. So it's very simple. Whole life lasts your whole life, right? Lasts your whole life. Whole life. So it's something that never expires. The price never changes. And it's going to build cash value. Generally 4 to 6% interest, depending on the carrier. Term life is like renting insurance. You rent it for a certain period of time. Now, whole life is going to have smaller coverage amounts because they're permanent. You can't put out a bunch of $500,000 policies that are always going to pay out. The carriers would go broke. But you can put out a bunch of $10,000, $20,000, $30,000, $40,000, $50,000 policies. There are two types of whole life, essentially. There are certain variations, but at the end of the day, it breaks down into two. There's guaranteed acceptance whole life, which is everything in the mail and on TV, AAA, AARP, Globe Life, and of course, every video, the $9.95 moron. These are plans where you don't have to answer any question. You could be terminally ill and go get your coverage. But what if you're healthy? Why would we want guaranteed acceptance? There's a 2-year gap of no coverage. You should be rewarded for your health. Just like if you have a very good driving record, you should be rewarded for that with a carrier's rates and coverage, right? The other type of whole life would be level or immediate. That has to be issued by an underwriter who's got the authority and the licensing with the carriers to issue proper day one coverage. Guaranteed acceptance is what the VA put out, and I did a video on the new VA life plan, and it's 2-year stint. These plans essentially are meant for people who are very, very ill. We are basically obsessed here with trying to find people the day one coverage they deserve at the lowest cost. And that's our main thing right there, is if we work with vets and they're out here looking, we try to keep them out of a 2-year wait. Term policies are going to have large coverage amounts. You can go into the tens of millions of dollars with these term policies. There are fully underwritten term where you're going to do physicals and blood work, urine samples. They're going to check the dog, the cat, grandma, grandpa. They're going to do everything. And then they're going to issue. Here's a rule of thumb. The more underwriting there is, the more likely this policy will not pay out. The more in-depth a carrier gets in looking at your health, which is the higher coverage amount. We really want to know what the health is with this person if we're going to offer him $1 million worth of coverage. Do you think insurance carriers like cutting death checks or paying claims? The answer to that is no. So they do their due diligence. They're smart. If term is issued, there is a 99% chance that is not paying out. So 1 out of 100 term policies actually pay. They're not meant to pay. They're meant for a what if, not a when you die, but a what if you die. That's what term is. Now, if you're 20s or in your 30s and a $500,000 term policy is $30 a month, you spend that at the bar in 20 minutes. So yeah, it would be irresponsible for you to not carry something like that. If you're single and you don't have assets, even still, it's $30. You spend more money monthly on stupid subscriptions. God forbid something happens, you could leave a ton of money to your brothers, sisters, mom and dad, whatever. Again, if I'm 20 or 30 and I'm healthy enough, I'm dumping my money into an indexed universal life policy because it's got a death benefit, living benefits, and it's going to grow some significant cash value. I have talked to a couple of clients who took out whole life when they were younger and fully underwritten whole life, meaning physicals, blood work, urine samples for a permanent policy. That's a whole nother beast. Most people end up in whole life anyways. Now, if we get into the 40s and 50s, you really have to look at the situation because in the 40s and 50s, now we have houses. We're getting discharged from the military. We have children. College is starting, high school, sports, whatever it may be. We need to really protect our mortgage. So in the 40s and 50s, we just have to dissect the situation. Whole life might make sense. Term life might make sense. Indexed universal might make sense. It's all about the person's situation. You cannot just buy life insurance because the coverage amount is big and the premium is small. Do you want to pay $72 a month for 20 years and get nothing out of that? I hope you would say no to that. Now, if you have endless income and your bank account is stuffed, probably wouldn't need life insurance anyways. But does it matter if you outlive a 20-year term that you dump a bunch of money into and get nothing out of it? Not really to that person. But even still, why would you do that? Why would you do that? Health is the dictator of what coverage is available. This is why when Dave Ramsey says whole life is a joke, everyone should get term life. If you've ever had a heart attack, a stroke, if you've had breast cancer, bladder cancer, you can't get term life. And if there is a random product out there, they are going to smack you with rates. We are not about letting our vets and our clients go insurance poor. There's too much of that going on. If your situation takes you to term, we go term. If your health and situation takes you to permanent coverage, we look at whole life or indexed universal. Now, indexed universal is like term and whole life having a baby. You get the very large coverage amounts of a term policy, but you also get the permanent cash value nature of whole life. It's tied to the market. That's what indexed means. So it's tied to the S&P and your cash value grows at whatever the percentage is that year. Now, if we average out the last 20 years, I don't know exactly what it is, but my guess would be anywhere between 8 and 12%. That's pretty solid compared to most investment tools because most investment tools don't have a large death benefit with it and living benefits, meaning you can get coverage or tap into your death benefit while you're alive. If you have a chronic or critical illness and you need to pay bills, you can draw from your 100K, 200K, 500K death benefit to keep food on the table. These are mortgage protection type policy. And also, let me clear something up. Burial life insurance, burial coverage is just a simple whole life plan. And mortgage protection life insurance, when you refinance or you buy a house and your mailbox gets littered with all of these, hey, if you get sick, you'll be able to pay off your house. It's term life. That's all it is. And there are some times where we have to protect somebody's mortgage with a very small whole life policy. The moral of the story here is that you can't take advice from people who don't have an insurance license. Even if they have an insurance license, that doesn't mean they're good at what they do. And honestly, we see a lot of that too. Listen, if you're very ill, are you going to take the advice of your sister who went to school for psychology, but she's trying to diagnose your stomach problem? Like, it doesn't make sense. I want to know what a doctor says. I want to know what the person who has seen this issue 500,000 times, I want to know what they say. Because that's the expert. That's the person who is going to give the right advice and the right medicine. It is ever so important for you to protect your family that way. People think life insurance is a joke. And then when someone dies, what's the first thought? Damn, I wish we had life insurance on them. Yeah, no kidding. But your pride, your ego, whatever it was, stopped you when that salesperson came to your house that day or called you, or you filled out some ad and got all PO'd because people kept calling you and bugging you. You gotta pick up the phone sometimes. Put yourself on the DNC list so nobody can call you anymore. Take care of your life insurance. Put yourself on the do not call list. That's what we do with our clients. You know, our clients get a text after the fact. They're going to basically have the DNC number right there so that they can call it, and now nobody can bother them about their life insurance. These plans, you really just have to look at the situation. You can go 10, 20, 30, 40 years in a term policy. 40 is rare. Paying X amount of dollars a month, no cash value. You outlive it. Poof, nothing back. Here's another thing to watch with term policies. If you have a term policy at your house right now, I would look for this. You could take a 20-year term policy out, and some carriers are going to say this is a term to 90 or term to 95. But if you do the math and you're 40, well, no, 20 years is only 60. How is this a term to 95? That means that they're going to give you the option to renew your policy every year. It's called annual renewable term. You want to talk about insulting prices? The first year might be bearable, but the prices literally go into the tens of thousands of dollars per month. And this is why 1% of term pays out. You either outlive it or you get priced out of it. So I need that to sink into a lot of people when they hear term. I don't lean one way or the other. I do what's best for the client. And me personally, I would rather have permanent coverage than something I'm going to pay a bunch of money into for nothing. With whole life, it's not the biggest policy, but it's lifelong security. I always ask people this question when we're on the phone, and it's a very difficult one to answer. If you had the choice of two policies, one was $250,000, one was 25 grand, we would obviously take the $250,000. But if we throw in there that 1% of the $250,000 policies actually end up going to a family member and 100% of the 25K go to a family member, do we want to leave our family the most amount of money? Yes. But are we the one in the 100 that it's going to go to? Do you want to take that risk? I don't know if I would. Sometimes that's why we find a happy medium. Maybe we do 200 grand of term and 20,000 of whole life, which in that case anyways, we would just do an indexed universal life policy. So it's all about timing in life. It's all about your health. It's all about your budget. It's all about the need. Is it burial? Is it mortgage? Is it just a duffel bag of cash because my wife has a shoe problem? Whatever it may be, that's what you have to kind of figure out. When I talk to people, I like to get everything out on the table. I basically advise to them what I would do in the situation. Why do I do that? Well, because I know what these coverages are. I know how they work. I know what they cost. And I know where people end up. We get calls all the time from 75, 80-year-old people. We know what is going to go on that phone call. Mike, I have a policy and the premium just quadrupled. Or Mike, I have a policy expiring in a year. I didn't know it was gonna. This is just poor advice from agents. Or it was purchased by the client and they didn't know what they were doing. It all leads back to working with someone trustworthy and someone knowledgeable, right? When it's time to choose life insurance, you have your big carriers. And I want to basically discuss this really quick. Your captive carriers. Captive carriers are your Nationwide, Allstate, Farmers. Captive carriers have the mothership of their company to shop, which might be 1, 2, 3 carriers. I know working at Farmers, when I worked at Farmers, if someone had a heart attack or 2 heart attacks and it was 4 years ago, they wouldn't qualify for any of Farmers life insurance. And I don't know every Farmers product at this point. It's MetLife now. Farmers bought MetLife, so they have some of their products as well. But any captive agency, they're not going to be able to sift through everybody. You talk to us, we can access whatever company we want, essentially. And that is just due to our licensing, credentials, authority, blah, blah, blah. What it does, working with veterans especially, is it allows us to pivot. If someone has burn pit emphysema, do they still need coverage just like the perfectly healthy person? Yeah, they both have kids and a mortgage, right? Is it harder to get coverage with burn pit emphysema? Duh, right? Life insurance is based off your health. Are there agents out there who hear burn pit emphysema and turn and run and want nothing to do with it because they're actually going to have to work and they're not going to get a commission or whatever it looks like? That's the truth, unfortunately. We protect vets, timeless. We dig in. If I've got 40 appointments in a day, but I'm on the phone with one person, that's all I'm doing. I'm focused on that person. Not that I could care less about the other clients, but I have a client on the phone who needs coverage for their family. They took the time to fill our stuff out. They took the time to check out who we are, and they answered the phone. So I am at their service, essentially, and I owe them every ounce of experience and knowledge that I have to help them protect their family. We are so busy here because people understand that and they see that. I think the old school nature of sales is gone. People just care about money and a quick buck. You know, my grandfather always used to tell me, work with a client, not the bank account. It's so true. And this is what I talk about at our convention. Be client driven, not commission driven. When it comes to choosing coverage, you want to have somebody with options. So independent or brokers, which I hate the word broker, but independent people are generally the ones you want to shop with. You just have to find the right one. Do the time and do the research. Gather your intel. Look at reviews. Watch video testimonials. If they don't have them, they probably don't have them. And if they don't have any type of credential or any type of credibility anywhere, don't work with them. Absolutely not. We've been encountering people who are telling the client that they're us. It's happened multiple times over the last few months. So what happens is people will go on social media. They'll fill out this ad. They'll fill out that ad. And then they get calls and set appointments with multiple people. We're quite known at this point in the veteran community, helping, post commanders and thousands of vets. Agents around the country know this. So when they're talking to our clients, they say they're us. They're not. We are a very small group. My team and I take this very, very seriously. We know that your information needs to be, kept a certain way, and we take a lot of pride in that. Both products have their strengths. Again, it's all based on the situation. I can't sit here and tell you whole life is better than term or term is better than whole life. All I can tell you is that good advice is better than bad advice. Only take advice from people who are licensed, people who understand the product, and people who just know what they're doing, right? We're never going to try to sell anything. We're just going to break down the facts and let you decide. You guys are smart. You're capable of making these decisions. So make it. We'll just break it down for you. You want to bless us with the task of taking on the policy? Honor and a privilege to help you. But it's not our main concern. It's not our chief concern. We are just here to help you understand what is out there, what is garbage, what is good, why it's garbage. It's that simple. We get misconceptions on the phone or myths where people are like, well, term is too expensive for me, or whole life is too expensive for me at this point. So if we talk about the older crowd, let's talk about 70-year-olds, 65 and up. Well, I'm 72 and I want term. Why? Because whole life is too expensive. Rule of thumb. Don't shop life insurance off of price. I can't tell you this enough. Probably smack me in the face for saying it so much. Find the right product first, then go find the best price. The statement, you get what you pay for, has never been more cliche and true in the world of life insurance. If you're 72, do you want a policy with a 1% chance of paying out? When we tell people this, they're like, yeah, right. That's total bull crap. Look it up. Look it up. Term policies are never issued if the carrier thinks that they're going to pay a death claim. No shot. Term is never issued. If you and I, the person watching this, if we owned an insurance company, are we trying to cut death checks? No, we're not. We're trying to make money. So we're not going to give somebody who's had 2 heart attacks and they're on blood thinners a term policy because they're going to die, or they're more likely to die than a very, very healthy person. We'll give the healthy person a term policy because they're probably going to outlive it. But we can't do that with a sicker person. My rule of thumb, truthfully, is 65 and up. You have to go permanent. You have to go permanent. And a lot of times we're telling people things that they don't want to hear. We get a lot of phone calls, put it this way, where a 68-year-old male comes into the call and they're like, I want $750,000 to $1 million worth of life insurance. Clearly, he has been misled. Clearly, he doesn't know how it works. Or he runs triathlons, is perfectly healthy, and can get coverage like that. But the price would be ridiculous. And you'll never see pricing or coverage amounts in any of our advertising because we just don't know. We don't know. An ad that tells you you can get $1 million worth of coverage for $20 a month. Are they looking right at you? Do they know that you personally are looking at the ad? You with a heart attack, or you with maybe a cancer scare or diabetes? No, they don't. They just want you to call so that they can talk your ear off and try to spin you into a commission. This is what goes on, guys. So, you just have to be careful at the end of the day. I'll leave you with this. Whether it's term, whole, universal, doesn't really matter. It's what works best for you. It's where your health takes us. It's where your budget takes us. And it's all about checking off the boxes, mortgage, burial, extra money, but doing it practically. We have to make sure we're doing it practically. At the end of the day, we need to make sure that nobody goes insurance poor. So to recap, whole life, permanent coverage. It lasts your whole life. Price never changes. Term life, it expires. Like AARP, Globe Life, these term policies increase in price every 5 years and then drop you at the age of 80. VGLI from the VA increases in price every 5 years. I talked to a guy yesterday, 78 years old. His VGLI was $1,300 a month. Thanks, VA. We appreciate you. So it's not all it's cracked up to be, but at the end of the day, what is right, what is wrong? Term expires. It's going to be cheaper. Stop and think about that for a second. Why does it make sense for an insurance carrier to offer you $500,000 at $20 a month? What is their benefit? There isn't one, right? But they know that you're going to outlive that plan. So they'll take your $20 or $50 or $100 or whatever it is, months and years on end. Universal life is a mix between both. If you guys want a better breakdown or a more in-depth breakdown, or if you need me to just look at your situation and tell you what's best, look at your current policy, tell you what's best, go to skipthesalesbs.com. You can just sign up, watch testimonial, the booking calendar. You book right on my schedule, and it's going to be me or one of my teammates that call you, and we will break down your situation. Very simple. Okay. I want to thank you guys for listening in. We are going to have a damn good 2025. We'll get into that next video. We're very happy. We're very blessed. We're very grateful and humble that you sat here and watched. Thank you guys so much. God bless.